Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is February 2nd, 2016, and today is Tuesday morning. So looking at the markets today, firstly on the economic calendar at 11:30 a.m. South African time, we have a GBP PMI construction number coming out. And then later on this evening, 11:45 p.m. South African time, New Zealand dollar unemployment change. And that's going to come out late this evening. So should you be trading around those hours, just make sure to have your eye out on the New Zealand dollar. Looking at the markets, EURUSD, what a layup, okay? We discussed this earlier in the week. We hit this low of 108.28 again on Friday, and we respected our support level. Now we're at 108.96. This is after Draghi was speaking last night. A big rally. So it's incidental how these things actually happen. I would sell into this move right here, and this is, at least 100 pip move, almost 100 pip move, excuse me. But still, within that area, you were able to take at least 30, 60 pips easy, okay? And there was absolutely no red bar, as you can see here on a 4-hour chart. So really a great rally for the EURUSD. I would sell into this move as we hit closer to our resistance level, 109-ish level, as we come closer to it. So big rally in the EURUSD as we spoke about, and if you've been following our market review, you would have made at least 30 to 60 pips on that trade. Looking at the Dow Jones yesterday, Dow Jones sold off initially in the morning, but then had a real big comeback, okay, towards the end of the day. Now we're selling off a little bit in after hours, but we had a tremendous sell-off and then, boom, right back, and we like those type of days. This is really classical short covering kind of days for the Dow Jones. As you can see here, we had this tremendous sell-off. If you haven't seen this before, we had a tremendous sell-off in the Dow Jones due to what's going on in China. People are really afraid that the Chinese overdid themselves with credit this past year, and as such, they're not meeting demands of future credit, so they can't even borrow money even if they have orders. So it's a little bit of a credit crunch, somewhat similar to what happened in 2008 in the United States, but on a manufacturing level as opposed to a housing level. So right now we're tracing a little bit after this big short squeeze, as you can see here, to 16,335. We're trading at 16,276. I would like to see some sort of continued short covering, and I believe that it's kind of interesting what's going on because the markets and the companies that are reporting healthy returns. Facebook came out with healthy returns. It's trading at $115 a share. Google came out with positive returns. So, the service companies are doing what they need to be doing in order to make money. So it's a little bit kind of a funny tug of war between the markets and the earnings that corporate earnings are showing. So the market is actually healthy, but the fact that the fact that oil is so low, as we could see here, oil selling off from $34 to $31, hitting that threshold, okay? Who would have believed that it went back to $34, but it did. And now this is a new threshold for us. $34 is a major resistance level now, previous somewhat support. But it's hard because there's nothing to really show us here. So, with the fact that oil, going back to our previous conversation, the fact that oil is really cheap now, the fact that companies are bringing in decent earnings is fueling the economy, so to speak, no pun intended. So we're back to $31 a barrel in oil. The question is, are we going to challenge this $30 round number and hit $28 again? People are saying that there's going to be a comeback to oil. I'm not so sure, okay? And it very well will maybe come back. But, for us as traders, we have to look at the short term and see what we can profit in the short term. This would have been a difficult trade a little bit because you probably would have catched it at 32.5, 32.70, and then be squeezed out of it on the short side. So, would I necessarily look to buy here? It might be a an interesting buy if you get in small and then see if it's holding to build a position to see if this is a bull flag over the past month and a half, over the half month that we've seen. So ultimately, a few things going on in the markets. Looking at gold here, gold at 1125, not doing much yesterday, really trading sideways. We sold off a little bit to 1,111. Now we're at 129. We're challenging this 1130 level again and trading at 1125. So a decent rally yesterday, about 18 points on the upside for gold. We did mention this yesterday as we hit this previous resistance levels and now subsequent support. So if you cashed in on this, good for you. But we've had some really good calls the past couple of days. So looking at the GBP Japanese yen, GBP really rallying, ripping on the upside. And we said that it may come to 1175, and sure enough, once it broke this threshold, it just took off. Okay, and we've been, it sold off a little bit, and this is from yesterday, and now we're at 1173 after going from 1171 to 1174. That's a huge move. And so it's trading. Okay, definitely think that it could hit 1175. I would like to see it hit 1175 as it's making these higher highs. And the question is if it's going to extend this rally. I'm not so sure. Okay, to 1175. I'm not so sure, but keep an eye on it nevertheless. Even if the graph is telling us it may. Now, just the correction is too close and too fast on the downside to say that this is a clear, pullback and then, another rally is expected. So it could very well be because it, rallied, these three bars. But, ultimately you'll have to gauge for yourself. And, this is why we teach to really ease into a position, ease out of a position so that you're not overextending yourself, overexposing yourself. GBP in general being very, very strong across the board. We have the GBP Japanese yen. We also have the GBPUSD here. Looking at it also rallying to, a decent high because we've sold off in the GBPUSD over the past year to 141 from 158. Which is a tremendous sell-off. But as you can see here, it's consolidating. Okay, this move right here is showing us that the bulls and the bears are fighting it out, and then you're getting some volatility. So, and then ultimately bulls are winning here. So it could really extend itself to 147-ish level over the next couple of weeks. I'd keep an eye on the GBPUSD. It hasn't been trading in the past. In the past 3 weeks, but nevertheless, it's been respecting these boundaries and these support levels, as you can see on the downside and on the upside. So, there is opportunity here. Okay, so just keep that in mind, and you got to be in it to win it. So, if you jump in a little bit, and then if you see that the position is working out for you, you could get a little bit more aggressive. This is Fred Razak at CMTrading. I want to wish you guys a great trading day. Thank you.